I'm going to give you 10 actionable steps to help you stop overtrading. So one of the most common problems that traders have is overtrading, and one of the most frequent questions that I get asked, and one of the reasons why people come to me looking for coaching, is because they need help to overcome overtrading. So I thought this would be a really helpful video because I know a lot of you do want it. Overtrading will often stop a really good trader progressing to being profitable, and often if you are a trader who's very experienced and has a very good strategy and knows a lot and knows what they're doing, but they're struggling to go from unprofitable or break even into profitable, then often eliminating overtrading can be one of the key steps to getting you over that bridge. So in this video, we're going to first of all look at some mindset shifts, because usually if you're an overtrader, it's because you haven't changed your mindset from some bad habits that you probably picked up when you first started. So a lot of the time when people first start, they have to do a lot of trial and error, and often that can lead to overtrading. So we're just going to look at, first of all, what good trading looks like and how to think about your role as a trader and how many trades you should be placing in a session or in a day. We're also going to quickly look at strategy, because sometimes you might be overtrading because your strategy is giving you too many entry signals, and therefore we'll need to adjust your strategy. So if that's the problem, I'll tell you what to do then. If that's not the problem, and the problem is that you're taking too many entries when there aren't signals, then you can move on to the actionable steps. So we're going to go over 10 tips, tricks, and tools that you can use in your daily trading routine, and these are going to help you overcome overtrading. And at the very end of this video, there is going to be a bonus gift, which is a worksheet, which is backed by psychology, and it will help you to overcome your overtrading. So if you are excited to learn how to stop overtrading, then make sure you hit the thumbs up button before we get started. And if you are new to this channel, then welcome. My name is Caroline. I am an indices trader, so I trade the Dow Jones and the NASDAQ during the New York session. I will be making reference to those just because that's what I know and that's what I do all the time. So if you are a Dow Jones and a NASDAQ trader in the New York session, then you'll probably get the most out of this video, but this will apply to all traders of all sessions. I've been trading since 2015. I've been coaching traders since 2019. I've coached over 100 traders one-to-one, and I've been coached by institutional traders. My background is actually in broadcast journalism, but I have recently taken a DIPFA qualification at the London Institute of Banking and Finance. However, I am not currently working as a financial advisor, so please note that nothing in this video or any of my other videos should ever be taken as personalized financial advice. Also, feel free to follow me on other platforms. I'm on TikTok and I'm on Instagram. It's trading_angel. And there are a lot of fake accounts out there, so don't trust anything that's not that. You can also email if you are interested in coaching, info@tradingangel.co.uk. So this video is going to be for all traders of any stage of their journey. It will be most useful to those who are quite experienced already and have quite a lot of knowledge and would be profitable if they weren't trading away their wins. I usually say who this video is not for, but to be honest with you, pretty much anyone can take something from this video, because no one will not benefit from not overtrading. So unless you're not trading at all and you're too scared to place a trade, then there is no harm in reducing the amount of trades that you place. So the first thing we're going to look at is some mindset shifts. So as I say, a lot of the time when people are overtrading, it's because they picked up some bad habits from when they first started. So trading is a bit of a strange job, because in any other job, you would go to work and you'd have someone to shadow or to show you around or to tell you when to do things and what to do. In trading, especially if you're a retail trader and you're working at home by yourself, you kind of have to self-teach. Obviously, you can hire a coach as well, but a lot of it is done on your own. So a lot of it is quite a lonely journey. So we do pick up some bad habits, and a lot of that comes from this need to trial and error. So this need to see what works and what doesn't work. So a lot of traders have told me that they went through this, and obviously I went through this myself, so I can relate to it, is that when you first start, you don't know what you're doing and you have to figure out what you're doing, and the only way to figure it out is to do it. So often this habit of overtrading stems from that. And then when you get to the point when you're making really big wins and you would be profitable, you're still struggling to break that over trading habit. So you're not then actually able to progress. So what good trading actually is, and I'm sure you probably know this if you are watching this video, if you chose to watch it, or if you sought it out, you probably do know instinctively that overtrading is not good, and that that's probably one of the reasons why you're not profitable, and that placing few trades is a lot better. But I just wanted to clarify it to just make it really clear what your day as a trader ought to look like and how you ought to be thinking about good trading. So good trading is placing a very, very small amount of trades a day. So it's not placing 10 trades a day. It's not placing trade after trade after trade. It's placing a very, very small amount of very carefully selected trades, and it's being very, very precise with your entries. Another truth and another mindset shift and another thing to think about is that your phone is actually designed to make you want to overtrade. So the trading platforms are designed to be addictive, and honestly, I don't think it should be legal. I think there should be tighter regulations around it, but there aren't. And it is a fact that they are designed to make you want to trade, to give you this sense of urgency. So one thing that I noticed is that when I'm on my phone, when I'm on the trading platform, when I'm on MT5, I have this sense of urgency where I want to take part. That is because they're designed to do that. So they've got the flashing numbers in red and in green, and it's in real time, and it gives you this sense of urgency and wanting to take action and makes you feel FOMO. So we are going to circle back around to these later on when we go over the actionable steps, but it's just to make you aware that having your phone on and nearby and being on the trading platforms is actually going to hold you back from your goals in a sense. So you kind of want to be on the charts, you want to be looking at the markets, and you want to be staying involved, but you don't necessarily want to have your phone on and open, and you don't want to be reacting to triggers which are designed to make you want to trade rather than your strategy. So I think good trading is about 1 to 3 trades a day. Everyone's going to vary, and that's going to depend on your strategy. It might be less than that. It might be just 1 trade a day. And perhaps on a particularly high volume day, it might be 4. But I think about the average day as 1, 2, 3. So 1 trade a day is a good amount, or 2 trades, but you don't want to be placing lots of trades. So if you're placing about 10 or 20 trades a day, you're probably over trading and you will need to scale that right back down. So it is about 1, 2, or 3. You're a sniper, not a machine gun. So this is a really, really great analogy. A lot of the work in trading is actually done in the learning and in the preparation. So on the day, on the job, when the market's open, when you're looking for a trade, most of the work is not actually done in that part. But often trading does actually attract high achievers or people who are used to working to a high standard. And therefore, naturally, it's a sort of person who wants to do well, perhaps is used to working hard, and it can feel really counterproductive to not be taking as much action and not to be doing that much. But if you just think about it like this, a sniper, most of the work is done in the preparation. So I've never worked as a sniper, but I would imagine that there is a lot of training to be done and there is a lot of practice to be done. So most of the work is done in the practice. I imagine they spend hours a day doing target practice, and there's a lot of training involved in that. But when they actually have a job, they've got 1 chance to make 1 shot. They're not a machine gun, so they're not just firing bullets here, there, and everywhere. They've got 1 chance to make 1 shot. It's very similar to trading in the sense that you are watching and waiting, and then you're waiting for that exact opportunity. And often you won't know exactly when it's going to be, but you have to wait for it and take action when you see it. And most of the work that you're actually doing will be in the learning, will be in the refining your strategy, in back testing your strategy, in practicing, in market evaluation, in doing a pre-market checklist, in deciding your directional bias, in researching the markets that you're trading, the company. So I trade the US 30 and the NASDAQ, as I mentioned. So before the market opens, I will be looking at the earnings reports, if there are any out, what the companies in those markets have released, the data, what they're saying, any projections. I'm looking at all of that stuff and I'm doing my points of interest, drawing those on. There is a lot of work to be done, but often it's done before the markets actually open. When the markets actually open, there's a lot of waiting and there's a lot of doing nothing. And my next point is good trading often feels boring. And that's true. There's a lot of time when you're feeling like you're actually completely useless and you're doing nothing at all. And it can be really difficult when you've gone from a job perhaps where you're constantly on the go to suddenly doing very little. But that is good trading. Good trading often does feel boring. So if you feel bored, then you might be doing it right. It's also easier to abstain altogether than to stop once you've started. So you can use any analogy you like for anything that this resonates with. Some people find chocolate, sweets, cigarettes, alcohol, I don't know, whichever one happens to be your vice. But they often find that it's easier to abstain altogether than to stop once you've had one. So mine's chocolate. There's no point in me just having one piece of chocolate because I'll want to eat the whole bar. So I find it easier not to have any at all. Other people, they find that's with drinking. They can't just have one. Other people, it's Pringles. In fact, famously, people can't stop once they've had one Pringle. So think about it like Pringles. It's easier to abstain altogether than to stop once you've started. So once you've placed one trade, if you are an overtrader and you have that feeling of wanting to keep placing trades, it's easier to postpone that than to stop once you've started. So we're going to circle back around to this, but it was just to let you know that that is a home truth and something that you should be aware of. And deciding not to trade on entire days is good trading. So part of your job as a trader is not only to take trades and to take really good opportunities when you see them, but it will also be to decide when is not a good day to trade. So for example, there are going to be many, many days when you turn up to the markets and you're ready to work and you've taken the whole day off to trade, and actually the market gives you nothing, you don't get any setups at all. And part of your job as a trader is to identify those days and to take no action whatsoever. So the first thing we're going to look at is your strategy, because as I mentioned before, it's possible you're overtrading because your strategy is giving you too many signals. So just ask yourself that question. Is your overtrading because you're following your rules exactly and your strategy is just offering too many signals? Or are you overtrading because you're trading when there aren't signals? So would your strategy work and make you profitable if you followed it exactly? Or is there something wrong with your strategy? That's actually a really important distinguishment, and you'd be surprised how many traders don't actually know the answer to that. But it's really important for you to think about that and to get the answer, because that's really going to depend what stage you're at. This is me looking at the two stages. So you're a little bit further ahead in stages if your strategy is good and you know it's good, and you're a little bit closer to being profitable if you don't know if your strategy is good, you're one step back. So you do need to do a bit more work, and you need to know that that's the stage you're at. So it would be impossible for you to trust the process and to move forward and be a profitable trader and to only place one or two trades a day unless you know what the stats are, unless you know what the success rate of your strategy is, and unless you have a clear strategy. So if you've got no idea how good your strategy is, I recommend doing some back testing. So there's a few companies you can use. I use FX Replay a lot, but TradeZella is also really popular. I've got links to both of those below, so both are good. FX Replay is a little bit cheaper. I think TradeZella is a little bit more detailed. Both will tell you how profitable your strategy is, how often it works, what the success rate is. And that's really important for you to know, because you need to know if you're going to be a profitable trader, if this is going to be your job, you need to know how often it works. You need to know that you can trust it, because there's no way for you to trust the process and to stop over trading and not to place lots of silly impulse trades unless you know that your strategy does work if it played out correctly. I've said that a strategy which works 50% with a risk to reward ratio of 1 to 2 is okay, which is true, because if you place 2 trades a day, only one of them wins, but you win 100 points and you lose 50, then you'll be up 50 on an average day. So that's pretty good. My strategies do work around 50% of the time. To be honest, most do work about 50% of the time. If anyone's telling you theirs works 90% of the time, that's completely ridiculous. Most of it is got in the risk to reward ratio, to be honest, so it's keeping that risk small. So most strategies will work about 50% of the time, give or take 10% either side. If you do need help with a strategy and you are looking for a coach, then you can email info@tradingangel.co.uk. So let's move on to the actionable steps. If you know that your strategy works and the problem is you, then these are some tips, tricks, and tools that you can implement today to help you overcome overtrading. Not all of these are going to work for everyone, so try them all and see what works for you. Let's just start with the two of the ideas that we mentioned before, just because they're quite important and they will kind of help you to move forward with these. So it's easier to abstain altogether than to stop once you've started, and your phone is designed to make you want to trade, which means you want to keep your phone off for as much as possible and perhaps away from you, so not too close. And you also want to delay placing that first trade, which starts us off very nicely with your first trade as a paper trade. So a lot of people find that they're triggered by the open, particularly the New York Open, because they can bring in a lot of volume to the market, and sometimes it moves wonderfully and goes straight into profit, and then other times it just whipsaws for ages. So a lot of people are placing trades straight away, trying to get a nice move, and often they end up getting caught in this cluster market chaos, and they find it very difficult to come out of that. So if you place your first trade as a paper trade, it can delay that process of actually getting involved in the market. Often, because there's so much chaos near the open, that's actually statistically not the easiest time to get a trade. So put your first trade as a paper trade, set it up with the long position, short position tool on TradingView, and that should help you delay actually getting involved. You won't get that same dopamine hit from placing a paper trade as you will with a live trade, so you're less likely to then feel a sense of urgency to place another trade. Charge your phone in the next room. This is something that I did when I was trying to overcome overtrading. So when I first started trading, for the first 3 years, to be honest, I did have a problem with overtrading, and I used to not charge my phone overnight, and then I would let it wear out in the morning. And then when I came to trade, I would be charging it in the next room. So I knew that the battery was low, and there was this hurdle of getting through a couple doors and then having to take my phone off charge before I was allowed to place a trade. So I would only go through that process if I was certain about a trade. I wouldn't just be doing it every time I saw a little fluctuation. Set stop and start alarms. This is one that I do and is very helpful, and this is one that I teach all of the traders that I coach. I send them all of the alarms that I have. So throughout the trading day, I've got loads of alarms. I've got even ones that tell me when to have my lunch, and that's based on the times of day that my strategy is lower probability. So it reminds me to eat in those times rather than when it's more likely to get a good trade. But I also have ones that tell me when to stop trading because of lower probability as well. So for example, I trade US 30 and NASDAQ in the New York session, and my strategy gives a lot of false signals during 4:30 and 5:30, which is usually when the market starts to consolidate for the New York lunchtime. So I put a stop alarm at 4:30 and a start trading alarm at 5:30. So as soon as that alarm goes off at 4:30, I have to leave my desk and stop trading. So which alarms you use and what times you use will be different depending on your strategy and what time of day you trade. But have a look at when it's most probable and least probable. Set those alarms, and then you have to respond like Pavlov's dog. When your alarm goes off, you have to stop and start and do what the alarm says. This will also help restrict the hours that you're trading for, which is obviously good because the less hours that you're trading for, the less likely you are to be overtrading. Also, having a little bit of a break, it can also help to reset you a little bit. So if you are feeling a little bit triggered by the open and are feeling a little bit like you're having FOMO because you didn't get in, then actually going away when the market's still open and coming back an hour later can almost reset that FOMO. So a lot of people find that they can then sit there a little bit more ready to wait for a trade when the market's already open. I also always say, if you feel like FOMO trading, remind yourself that you weren't profitable anyway. I know that sounds very harsh, but if you're watching this video, you're probably not profitable. You're probably close to being profitable, and you realize that if you weren't over trading, you would be, but you're probably not actually profitable at the moment. So anytime you see the market shooting off and you feel tempted to jump in and you feel like you need to get involved, just remind yourself that you weren't profitable anyway. So what you're doing isn't working, and chasing these trades and chasing these big moves every time you see them is obviously not the answer. So it might feel like you're missing out, but you're not missing out because you weren't actually making money anyway as a trader. Also, ruling out entire days. I've mentioned this before, but being a good trader is knowing when not to trade. Some of these days you should rule out in advance. So decide what days you're going to have off. Bank holidays are a great one to have off, although often the markets will be moving. They won't actually move with the same amount of volume, or they won't move in the same way. When the central bank speech is also a good time to take off. If you haven't slept, or you're not feeling well, or you have a particularly stressful day and you feel like you might be more susceptible to overtrading to try and get a win to make yourself feel better about something else. These are all days that you can actually designate to not trade, and you should actually get into the habit of doing this quite regularly. So maybe once a week or once every 2 weeks, just think quite carefully about which days are less likely to be good, either for things that are out of your control, like a central bank speech, or things which are in your control because perhaps you didn't sleep well. But just get into the habit of designating entire days to take off from trading. What you can also do is you can also rule out entire days to not live trade. So we're coming back to the whole, it's easier to abstain altogether once you've started, but you can paper trade on those days. And the reason why this is quite beneficial is because you're not actually removing yourself from the market. So you're not losing touch of the market movements entirely. You're still involved with it. You're still drawing on your points of interest. You're still seeing if your strategy would have worked. You're still somewhat engaged with it, and you're still seeing how the market reacted, but you're not actually risking any money on those days. And you can do alternating between paper trading and live trading anyway. So if you're struggling with over trading, then you can just do 1 day on and 1 day off, which is slightly like ruling out entire days, but ruling out entire days is done consciously based on actual things, actual reasons why you think today might not be a good trading day. Alternating is similar, but it kind of is a little bit more random. You're not picking the day because there's a central bank speech or NFP or because you're tired. You're just doing it because it's the day after you live traded. And the reason why this can work is you're just removing yourself a little bit. You're still engaged with the market because you're still drawing your points of interest. You're still seeing if your strategy would work, but you're not going in with that same level of investment, and also you're not risking any money. So it allows you to be analytical without being emotional. So you're still getting all of that feedback and you're still making progress as a trader, but none of that frustration or emotion that's holding you back is present. So understand what kind of trader you are. That can help you to put certain rules in place based on that. So when I was an overtrader, the reason why I would overtrade is because every time I made a win, I wanted to get straight back in the market. I was almost too happy about the wins that I wanted another one straight away, and I would try and get back in straight away, and then I would just trade away my win. So I was making this great big win at the start of the session, and then by the end of the session, I just lost all of my money placing stupid trades because I was desperate to do more of the same. So just understanding that has been really helpful, because I realized, first of all, statistically, my strategy doesn't work in the sense that it doesn't offer one opportunity straight after another. If there's a really big move in the US 30 or the NASDAQ, sometimes obviously it will go straight away. There'll be another opportunity straight away, but usually it will pause for a little bit, it will cluster, it will have a moment of chaos sometimes where it will just go up and down, sideways, but it doesn't tend to just give nice opportunities one after the other throughout the day. Sometimes on a news day it might, but on a typical day it doesn't. And therefore, I'll know straight after a win that I want to place another trade, but I have to remind myself, statistically, I'm more likely to lose if I get back in. And therefore, removing myself after a win is more beneficial to me. However, a lot of the traders I work with actually have the opposite. So they're fine to walk away after a win, but after a loss, they want to make that money back and they'll keep trying to get back in. So the first thing you need to do is just understand which one you are. And then once you know which one you are, you know where your rules have to come in. So for example, if you're like me, you need to walk away after a win. Whereas if you're the other type, you need to walk away after a loss. So have a designated other activity. This can help you to walk away. So I've had so many different designated other activities throughout the years. There was a time when I got really obsessed with online poker because that would keep me entertained when I was waiting for a move in the market. But the problem with that was I almost got too into it that I was missing opportunities. What I'm doing at the moment is I'm learning Spanish on Duolingo because the lessons are really short. So they're only about 1, 2, or 3 minutes long. So I get really into that because that's an app that's designed to be addictive. They give you rewards and points and they put you in competition with complete strangers, but I still get sucked into it and I still want to beat these complete strangers that I've never met before and be at the top of the league that I'm in. And because it's so addictive, it does take my attention. It keeps me entertained while I'm waiting for a move in the market. But the lessons aren't so long that I will actually miss an opportunity if I see one. Also, you can use alarms if that is a thing as well. So always have alarms on your trading in case you are doing another activity and waiting for a trade. But something like that, have a designated other activity to stop you over trading. You can also do this in your break. So for example, you can have a designated other activity if you've got a trading session that's say 3 hours long, 4 hours long, whatever, and you know that you're only going to be placing one trade in that time. It's really difficult to focus for that whole time. So you can have something that you're working on during that time. Obviously use alarms and make sure you're staying focused on the charts as well so you don't miss an opportunity. But you can also have something that you can pull yourself away from entirely so that, for example, if you like to overtrade after a win, then you have something in a completely different room, even out of the house, that you can go to do after you make a win. So another one for me, there's a hot yoga studio down the road that do classes all day. So if I have a winning trade, I will book a class on the app straight away and then I will go to it. I can't take my phone in, therefore I cannot trade. And when I come back for the second part of the session, I don't have that same euphoria that I felt because it's not coming straight off the back of a win. It feels like I'm coming into a brand new session almost. But obviously, if you're the sort of person who likes to overtrade after a loss, then you can have something similar that pulls you away. A lot of the traders that I coach like to keep up to date with their 10,000 steps. So they will actually go for a walk and they'll try and get their 10,000 steps in and then come back. So just have a designated other activity, something that will pull your focus away and will stop you from overtrading. And bilateral beats, I don't know how they work, but it's something to do with two different frequencies in each different ear. And people find them really helpful for focus. So a lot of traders find that when they listen to bilateral beats during the market, it actually helps them with their overtrading. I like to listen to classical music. For some reason, that's just what works for me. And I find that I don't have that same need to be placing trades. I don't know if this is the science behind it, but how it feels to me is that when I've got music on, when I've got classical music on, it kind of calms me down, but it's also entertaining. So I don't have that same need to place a boredom trade when I've got music playing, but it's got to be classical because if I'm playing dance music or anything that's too exciting, then I might feel a bit more like wanting to place a trade. So the type of music you play is important, but a lot of traders do find that playing music does help them. Bilateral beats, there is a lot of science behind it, and it does help a lot of people with ADHD and to struggle with focus and to sleep. So if you type into YouTube bilateral beats for focus, then you should be able to find some playlists on there. And as promised, if you stayed until the end of this video, I have a free gift for you. So this is a sheet that can help you stop over trading. It's backed by science. So basically, when people are trying to achieve their goals, if they see a visual reward, they're more likely to keep going in order to gain that reward. So slightly inspired by Duolingo and how addictive they've made that app because they give you little rewards for completing the tasks. But I've decided to make, there you go, you've got little trading angels, and if you don't overtrade and you follow your rules, you can put a little smiley face. So you get a little smiley face angel. If you don't trade well and you don't follow your rules, there's a big cross that you have to draw out over the day. So each day you either get a smiley trading angel or you get a big cross over the trading angel. And this is something that I use with the traders that I coach to help the ones that struggle with over trading. So you can use the link in the description below. You can print this off and see if the reward system helps you. What you want to do, obviously, is you want to have rows and rows and rows of lots of smiley trading angels. And if you've got a whole streak of them, then you're going to be more likely to want to keep it up rather than to ruin it by drawing a big ugly cross over it. I've also got some little trading mantras at the bottom. These are quite good just to say before the trading session. A lot of traders use trading mantras to try and focus them and to anchor them to the process of trading well. So at the bottom it says, I am a trading angel and trading angels trade carefully and precisely. And I am a consistently profitable trader. My job is to trade well, not to make money. So I hope you found this video helpful. I hope that this really helps you to overcome your overtrading. If there's anything that you do which has helped you to overcome overtrading, then please put them in the comments below because we can all be stronger together by helping each other. If you found this video helpful, make sure you give it a little thumbs up. It's good for the YouTube algorithm and it means it will reach more people.